Financing real estate investments involves several pathways, each with distinct advantages and challenges. Traditional mortgages offer stable, long-term funding with lower interest rates, but they often require substantial down payments and strict credit qualifications. On the other hand, hard money loans are ideal for quick access to funds, particularly for short-term projects, though they come with higher interest rates and fees due to their asset-based nature. Private financing offers flexibility and customized terms, appealing to those with non-traditional financial profiles. However, it can be costlier and depends on finding willing lenders. Self-directed IRAs allow investors to use retirement funds to invest in real estate with tax benefits, though they come with complex regulations and restrictions on transactions. Choosing the right financing option depends on your investment strategy and financial situation. Whether seeking long-term rental income or short-term gains, aligning financing with your goals will help set the foundation for a successful real estate venture.
Kathy, you mentioned that when you started, you could have zero down or even get cash back. What do you advise new investors on choosing between a traditional mortgage, hard money loan? Like when you're starting out, where do you go?
Yeah, it depends on your situation. If you're starting out and you have a good job, you have great credit, you've got some savings, maybe you've got some money in the stock market and you're overinvested there and you want more of a hard asset that cash flows today, then you're in a different position than somebody who has no money, who's just starting out in life. So you're going to have completely different strategies. For the professional, which is who we work with at Real Wealth, because we're from the Silicon Valley, we would see all these really busy tech workers who, were making lots of money, but still having a really hard time building wealth because it's so expensive to live in Northern California or California in general. We created a solution for them. Like, let us help you invest in turnkey properties nationwide with property management in place. So all they have to do is get the loan and, they could probably qualify for it if they've got the job, the 2-year job history, plenty of reserves, good credit, and so forth. So that's a little bit more on the passive side. Then we also offer completely passive, which would be syndications, where we just do all the work and you just invest, but you do need to be accredited. But for somebody starting out, there's lots of opportunities too. And this is what frustrates me is like people don't realize that they can get in the game. They don't have to have all that money. You can get your first home with 3% down and house hack. That's how we did it. We were able to rent out rooms in our house, just like Rob said he did. And, actually, we're still doing it today. We still have 2 Airbnbs on our current property that pretty much pays for everything. And for our lifestyle here in California, you can learn how to flip. And if you learn how to do that or get a mentor, get a partner who can show you how to do it, there are lenders who will lend 100% of the deal if there's enough equity in there, if there's enough upside. So you can wholesale, you can find a deal with seller financing. So I really want the audience to know that there is absolutely no excuse for not jumping in, whether you have money or you don't. There's something for you. You just have to get the right education.
I don't know if Dana was raising her hand. I saw her smiling, so want to see if you had something to add.
No, I was smiling because of that. And what I love about it is like you don't need the capital right up front, and house hacking is definitely something that I'm a huge proponent of. And then, as Kathy said, the second that you start considering your current assets that you have in properties as a way to generate more income, you might do a strategy that's short-term and long-term, right? Some of your properties may be long-term. Maybe there's a house on your current land, or like where your current primary residence is, that is a short-term vacation rental. I think there's a lot of creative things that you can do to generate that wealth. And then again, obviously the tax side, I think, is a really important one, especially if one of you, between you and your significant other, has a W-2 job.
Mm-hmm. Rob, can we go to you? Because it sounds like you've had short-term, mid-term, long-term. Maybe you can talk about, especially the short-term rentals, like what financing options have you found most effective, especially when you want to grow
for sure
faster?
I think there's a few different ways you can do it. I mean, I would say the 3 or 4. I mean, I have pretty much at this point tried every financing option. I have done, a primary residence loan and FHA and lived in it as a primary and rented out places on the property while I lived there, and then converted it into a rental like years after the fact. I've also done second home vacation or second home loans or vacation rental loans. That requires 10% down for you to do that. Couple stipulations that you have to abide by if you're going to do that. Typically, lenders like to see that you're going to be actually vacationing, right? It is a vacation home loan at that property for 14 days every single year at a minimum. Very easy to do because the premise of short-term rentals is that you are buying vacation homes that other people pay for that you get to enjoy on the side. I've also done creative finance strategies where I've taken over payments via sub 2, a subject to transaction. And one of the more recent ways that I have financed a short-term rental is actually 100% seller finance. The seller wanted a 10% down payment, financed it to me at 3% just under a year ago with a loan term of 30 years. So that one is obviously my favorite. I don't really like dealing with banks if I don't have to. Seller financing is its own gold mine in and of itself. But I mean, I would say I've tried it all. And for me, the simplest and kind of easiest way that I've sort of uncovered, I think has been the creative finance route.
Any mistakes to avoid since you've experimented with everything?
Yeah, I think a lot of people, they try to get very creative with breaking into short-term rentals, and it's a very like a dreamy asset class to be in. And so because the cash flow is so high, I think it just gets a lot of people to run full sprint towards short-term rentals. And I see a lot of people that are like, they get really sneaky with it. And they're like, oh yeah, I'm just going to use an FHA loan to buy, I'm going to use a first home loan to buy my short-term rental. And like, I only need 3% down. That's what we call mortgage fraud. So you definitely don't want to do that, right? Like every single loan, every single mortgage has very specific guidelines and rules that you want to abide by. So I would just say, make sure that you're actually using a loan product that is, that makes sense for the use case of it. So don't tell the FHA commission that you're going to live in it if you plan on Airbnb-ing it. That could land you in some pretty hot water. And I've luckily stopped a lot of people from doing that in my career. And I wish I could say that that number decreases every year, but people always, they feel like they're pitching me this really crazy new idea. They're like, hey man, did you know you can put 3.5% down? I'm like, no, you can't. So that's probably the number one mistake that I would probably tell people to avoid.
So follow the law. Follow the law.
Yeah. It's a good tip in general. Stay out of prison. Like it's what our mom taught us.
Good advice. Good advice. Joe, can you comment on the financing landscape for multifamily properties? I imagine it's changed with the current economic environment, and I'm wondering how you're adapting.
Yeah, absolutely. So we do a lot of commercial with our clients, and it's not just multifamily. It's also retail and industrial, and those loans are different than the agency debt that you would get for multifamily. But yes, very much like everything else in real estate, interest rates went up in late 2022, and things became a little bit more challenging. Luckily, in commercial, creative financing, seller carrying a second note, and other solutions are more common and more acceptable than somebody selling their own home and have never heard about seller financing. But I just wanted to kind of reemphasize what said at the beginning of the segment. I think the best and the biggest financial impact that a young person can have is doing house hacking, whether it's lending, getting roommates, or getting a duplex, fourplex kind of property where they can rent the other units. Best financial impact you will have on your life. We had a client a few years ago, 26-year-old software guy, bought a duplex, moved into one side, rented the other one. A couple of years later, he moved out. At 26, 27 years old, not only he was a homeowner, he also had a rental unit. And how many of these people do you know? And all he had to do is put like 5% down to get into it. So I think that is probably one of the biggest financial start to somebody's life if they're going to go that route.
Does it take a little luck to have like a good experience on the first one? Because I feel like we all know somebody who tried to rent out And then many people say, this is the greatest thing ever. I want to do it again. And I want to just keep repeating that. But others have said, oh my gosh, that was the biggest nightmare. I never want to do that again. So any advice on how to put your best foot forward and increase your odds on the first time?
Yeah. So really, not trying to win it is a good idea, right? There's a ton of resources online, whether it's on YouTube or online. Bigger Pockets is a fantastic resource, and they can teach you how to get a tenant and how to screen and what to look for and so on, and not just trust anybody that says, yes, I got a high paying job, and you don't verify income, or you don't call the previous landlord to make sure that they didn't leave holes in the walls. So do your work up front. Hire a professional. Even if you do, like, for example, a duplex and you're going to lease the other side, maybe hire a professional property management to help you with the first year, just so you learn from their experience. But I think educating yourself and learning is the best way to do that. And then the other side of it is, you know what? No matter how professional you are, it will happen at some point. It's going to be really bad luck if it's the first one, but hopefully it's not the first one, but it will happen at one point or another. I'm sure everybody on this panel have horror stories that happen somewhere along their career in real estate, right? It's part of the business, because we're not in the building business, we're in the people business.
Does everyone have horror stories?
Oh, so which one do you want?
Yeah. I have horror stories just from today, I think.
Yeah, too many.
Yeah. I mean, the way that you reduce risk is just making sure that you either have experience or you are working with someone who has experience. There are ways to protect yourself in real estate under getting a good inspector, getting a good appraiser, knowing the area, what are the crime rates, if you're in a high crime area, there's a better chance that your house is going to get broken into or something's going to happen. So really understanding, the more information you have, the better. But at the same time, that could lead to analysis paralysis where you don't do anything. So I think I agree with everyone here that understanding that you win some, you lose some, you just really need to win more than you lose.
Anyone want to share a horror story? Anyone brave?
Oh, man.
I mean, so
yeah,
many.
Go ahead, Dana. Yeah.
I have a pretty good one. Speaking of, build to rent is very popular these days. And so gave a developer some money, and fast forward 3 years later, never had to sue someone, but definitely had to sue someone in this case to get the money back because the property was never built. And why I bring up that story is that you're always going to have something go wrong. And it's at different points in the life cycle. It usually actually happens pretty early on. And then, as Kathy said, you educate yourself, you work with a mentor who's been there and done that to help reduce that risk. And then over time, it gets better and easier. And you almost have a playbook. Like, you have who you're going to go to for what part of the life cycle. And it makes it so much easier and so much smoother, which is why we're all here. We're passionate about making sure others don't make those mistakes. But I do think that you just have to get into it first, knowing that it's going to be a huge time investment at the beginning to get things set up. It's going to be a lot of education up front. But in the end, when you look back on it, I've been in it for 15 years now. Looking back on it all, it totally makes sense why you should invest in real estate. And because it's hard, not as many people do it as they should. And there's that huge opportunity for you with leverage and taxes. So yeah, I would say that was my horror story. And it actually turned out to be a good story because of the interest on it. And I obviously took the person to court, the developer, and won. It was very clear in the contract that the property was never built. But you will have certain stories like that. And it can get you down, but you just have to keep going and learn from the mistake and not make it again.
Anybody else?
I mean, I've got horror stories, but they all pertain to hosting, crazy things that have happened at my rentals. But I think my philosophy is like, it's not so much about the horror story itself. I mean, if you think about it, like, the greatest skateboarders in the world, like Tony Hawk didn't quit after he broke a bone, right? Like he healed up, got back on the skateboard and went on to become the greatest skateboarder of all time. I kind of think that's just the way real estate is. It's like, we're going to have broken bones, bruises, and how willing are you to come back to the game after you've healed up? Or are you even willing to heal, right? I think a lot of people get so scared at sort of the little things coming up in their first rental that it causes them to never actually go and buy another property. I think the skill to develop is not necessarily just how to avoid the mistakes, but how to develop the thick skin to where they don't bother you. Because I've hosted tens of thousands of people at my properties. Nothing really phases me these days. One time I was having wine with my neighbors. It was the first time my neighbors ever came over to our house, and we were having a good time. We were vibing and, like drinking some wine, having a good time. And I get a phone call, and my assistant, she's basically like, "Hey, there's a manhunt at the property, and the cops are like looking for a perpetrator." And I was like, "Oh, okay, well, cool. Like, let me know how it goes." And then I get off the phone and I sit down at the dinner table, and like, my neighbors were like, "What happened?" I was like, "Oh, just there's like a manhunt. They're looking for someone that was at my property." And they're like, "What? Like, that's it? Like, you're not going to acknowledge how crazy that is?" And I was like, "Oh yeah, I guess that is kind of crazy, but I know I'm not going to fly out to West Virginia from Houston on a random Thursday night, And so it's like, you just have to kind of understand that every situation you can't avoid everything, but you can put teams in place to help you manage those situations. And, kind of the final note on that story, there was no perpetrator. The guests walked into the house. They flipped the light switch that turned on a room on the other side of the house. And so they thought that there was someone in the house, and they got all freaked out, and they called the cops, and K9 unit came out, and oh man. Yes. So that's Airbnb in a nutshell. You sure you're ready for this?
I love it. So perseverance and resilience, you're going to build very strong muscles on those two fronts.
Yeah, well, but that's true to every investment. Honestly, if you invest in stocks, you think everybody had a perfect score between 1980 and now. They all saw a downfall and everything else. Every investor vehicle has ups and downs. Real estate is not different. It's just that ours get to be a little bit more vivid than, oh yeah, the stock plummeted. We have stories like we manage hundreds of C-class apartments. I'm holding back because I'm pretty sure YouTube would want to keep it PG-13. So, yeah.
Yeah, definitely. I think with stock investing, it's inevitably a series of mistakes, and you're just trying to limit the mistakes. And if you limit your mistakes enough, then you can be one of the best investors in the world. Let's go to segment 3.